Snowflake is the most anticipated IPO of the year. Investors should decide in advance how much they are willing to pay, as Snowflake will test the upper limits of what it means to have a stretched valuation. Heck, the company has even inspired value legend Warren Buffett to change his thesis and invest in an IPO prior to profitability. Perhaps because the company delivered sky-high revenue growth last fiscal year of 173% and 121% in the most recent quarter, with a record-breaking net retention rate of 158%, which is the highest of any public cloud company at time of listing. These industry-leading numbers are due to the company disrupting the data warehousing market with a superior cloud data platform that delivers across key differentiators. We review this below. Despite Snowflake demonstrating excellent product-market fit, clear competitive advantages, and strong management, no company is perfect. We go over a few key risks that investors should keep in mind as the bidding becomes fierce on opening day. Snowflake has strong financials for a tech IPO, yet it's important to remember the product has been available for only 6 years and tech growth is typically strongest in the early days. The company delivered 173% growth in the fiscal year ending January 31st, growing from $96.7 million to $264.7 million with gross profit margins of 56.2%. These gross margins are below what cloud companies are capable of, yet improved in the most recent period. Revenue grew 133% year-over-year in the first 6 months of fiscal 2021 ending in July, growing from $104 million to $242 million with improving gross profit margins of 61.5%. In the most recent quarter, the company reported growth of 121%. Here, we already see the effects of age within a short time period, as Snowflake settles from 173% growth to 133% growth and now to 121% growth. This is not a negative by any means. Triple-digit growth is to be celebrated, but keep in perspective its age when comparing Snowflake to any high-growth cloud SaaS peers. The bottom line has been varied depending on what period you look at. The losses doubled from fiscal year 2019, with net losses of $178 million increasing to net losses of $348.5 million in fiscal year 2020. More recently, in the first 6 months of fiscal 2021, the net losses were flat period over period at $177.2 million compared to losses of $171.3 million. This could be an encouraging sign, or it could be Snowflake tightening the belt temporarily for the public offering before returning to the original pace of worsening losses. There is not enough history to know if the more encouraging flat rate of losses is sustainable. Adjusted EPS was negative $1.63 in the fiscal year ending in January compared to negative adjusted EPS of 72 cents in the first half of fiscal 2021. Net retention rate for Snowflake is a record 158%, the highest of any company when going public.